Ladies and gentlemen, welcome back to the channel. Let me know if you guys can hear me down in the comments. It does appear to be working. Let me know if you guys can hear me down in the comments. Sounds good to me. All right, guys, welcome back to the channel. So far, we only have 3 people on here. We're gonna wait a few minutes before we get to the real estate market in Las Vegas. I wanted to do this this quick update for everyone to see what's happening with the upcoming recession that everybody has been talking about, and we're going to talk about numbers. I'm going to show you all the data throughout history on what happens to home prices during recessions. We're going to talk about why there's going to be a recession, if there's going to be one. And also how the real estate market, kind of speculate what the real estate market is going to do based on a recession if it were to happen. On top of that, I'm going to go over some data for, let's see, so on what's happening in the market as far as home sales, how many homes are available on the market, things like that, to give you more information and insights here in the Las Vegas Valley. All right, so let me share my screen with you guys. Let's start over with home prices, and you can see here this is the updated home price sheet. So we're looking at a home price graph directly from the MLS. So this is from my MLS, and you can see here prices rising. This is a 3-year chart with this is the peak last year in May of last year, 2022, with a median sales price of $445,000. We dropped all the way in January to $386,000 on the median sales price of a house. So a big drop, big correction. But then soon after that, home prices rebounded, and now we're at $410,000. And it's been steady at $410,000 as interest rates are still climbing up here. Obviously, we don't know what's going to happen in the future, but this gives you kind of an idea of what's been happening lately and where we are as far as home prices compared to the prior years. Also, if you look at interest rates, I was checking out the interest rates this morning, and we were at around, let me look it up really quick. We were around 7.6% for the average 30-year fixed rate. Which is quite high, but historically speaking, it's probably not that high. Many of you have been there for the super high interest rates, so you know how 7% interest rates are actually pretty good for a buyer. Now, out of these homes, one thing I've noticed out of the homes sold, a lot of the homes are new construction homes, and there's a reason why that's happening. Obviously, we have a lot of inventory when it comes to new construction homes here in Las Vegas, and also on top of that, they're offering great incentives that resale homes are not offering, and there's no inventory on the market for resale homes, so people are more and more going over to new homes to buy some. As far as new listings coming on the market, we are not getting that many 4K versus, back in the craziness. Well, June, this was when we had, the big increase in interest rates. So everybody freaked out and started putting their house on the market. Homes for sale. This will tell you pretty much what's happening to the inventory. This is over the past 3 years. And you can see inventory kind of fluctuated. It went up when interest rates were rising. And then obviously as prices are recovering, inventory is going down. We're down here in the valley to 6,600 homes on the market, which is not much at all. But the good thing, well, not good thing, the bad thing is also the fact that we are having not many homes sold as well. So even though there's low inventory, there's also low demand, which causes, prices to kind of stay stable because, you have to have one or the other one in a big there has to be a big difference between homes available and homes sold in order for prices to either go up or down. The closed sales, you can see they're also going down every month. We're at 2,600, so about 2 months of inventory on the market. If you consider homes up for sale are 6,600, and closed homes in a month are 2,600. Days on the market is kind of staying steady, but you see here 15 days on the market on average if you list the house at the right price. If you list it above what it's worth. It's probably going to take longer. And, you know, I would say it depends on the price range also. This is not considering the price range. Also, the price per square foot is something to keep in consideration. You look at the price per square foot back at the peak last year, we're at $260 per square foot. Right now, at $243, so that's pretty close to the peak that we had last year. And back in December was the lowest at $225 in the last 2 years or so. Now, that gives you a little bit of an overview on what's happening with the graphs, but you know, there's a lot to talk about the recession upcoming and why the recession is coming. So I'm going to share that screen with you, but let me see really quick what's happening. If you guys have any questions or anything, please leave me a comment down there. And then later on, we're going to go ahead and go over all the comments. Actually, let's read some comments before we get into the recession data and the graph. We can see here. Scooby-Doo says, hi, Jack. Hi. Bonita Nunez says, good evening, Jack. Thank you, Bonita. Actually, appreciate you commenting on the videos. I always see your comments, so thank you for that. Then Johnny Mundo says, hi, Jack. Can I purchase a home in Nevada even though I live in California? Yes, Johnny, you can purchase a home in Nevada. However, you have to purchase it either as a second home loan, which means you're not going to be living in it as far as the bank is concerned. So only 10% down, well, at least 10% down is what you need. If you buy it as an investment property, the minimum requirement is 20% down, but you probably want to see 30% down to get decent interest rates. And those interest rates are going to be higher than, for example, you living in a house. So obviously, if you're living in a house, the interest rate might be about 1% lower, maybe about 7% with some buy downs today. If you get an interest rate for a second home loan, you're probably looking at maybe 8% without buying down any rate. So that's what's up. What's up, Noel? Thank you for the message. Cat Cannon says, good evening, Jack. Hi, Catten. Cat Cannon, whatever, you know. Hi, Cat. Hi, Diana. Hey, nice to see you guys all here. So let's go over some data. Let me share my screen with you guys. Thank you for sharing some comments. Let me know any questions you have about anything I'm talking about, and let's go into some data. I know it might be a little bit difficult to understand this stuff. It's kind of like macroeconomics, nerd stuff, but I'm gonna try to do my best to make it as easy as possible for you guys to understand. And I'm not saying that I'm a genius on this, but I'll tell you what I know about this, okay? And if you guys think I'm wrong, let me know down in the comments. The U.S. housing market is headed for the largest sales slowdown since 2011, says Fannie Mae. Now, Fannie Mae is a big company that does all the loans for the properties that we have. It's a government funded company, so the Fannie Mae has some regulations also on the housing loans that we get out here, and they're pretty much one of the biggest mortgage holders in the United States. Now, Fannie Mae is saying this based on their research that we're going through the largest sales slowdown. Now, sales slowdown doesn't mean necessarily that home prices are going to go down. I want to make sure that you guys understand this. Home prices going down has nothing to do with sales going down. Sales going down means how many homes are being sold on the market. But the price for which they're sold is completely separate. So when you see a big, spooky headline like this one, you have to understand it's not about home prices. It's about homes for sale and how many homes are selling. U.S. Home sales are headed for the largest slowdown since 2011, Fannie Mae says. That's due to headwinds like higher mortgage rates amid a weakening U.S. economy. And then the mortgage finance giant expects the U.S. to slip into a recession in the first half of 2024. So what they're saying here is that Fannie Mae, this big mortgage finance giant, they expect pretty much for us to be in a recession in the first half of 2024. And they might very well be right. And here's why. Let me show you some data, some stats from history. So we're looking at from 1971 all the way until today, 2023. And we're looking at what's at, well, 2022. This one is not really updated because we don't have the recent spike in interest rates that we've had. Okay. But the orange line right here is the interest rates going up. Okay. Going up and down, up and down, up and down. This is when your parents or whoever, maybe you yourself, say, you know what, my first mortgage loan was 14%. And we thought that was normal. That was back in 1980 when we had that huge increase in interest rates to try to slow down inflation. And it was pretty tough for a lot of people out there to afford homes. But then back in 1980, we had, homes that were worth $100,000 instead of today's price that are $400,000. Anyway, long story short, whenever you see a rise in interest rates, what happens is you see this gray line right here. This is the time in which we have a recession. A recession is 6 or more months of negative growth for the GDP, gross domestic product of the United States. So every time you see one of these gray lines, that's when we had negative GDP in the United States, which means the economy is struggling and improving and getting better. So every time you see an increase in interest rates, it really slows down the economy, which is why we have recessions. Okay, so first recession, 1970s, another one, 1980s. Then we had in 1991 another recession here, 2001 the dot-com bubble, and then this was the housing recession that we had. So you see interest rates go up, housing goes down, and so does, and then we have these kinds of recessions, and then we have another one over in 2020. That was the quickest recession that we've had in a very long time. But look how much time went by since the last recession. Obviously, I think this is also guided through by the low interest rates that we had. It was difficult to get into a recession with such stimulus in the economy, such money printing, because then inflation eats away eats away everything and stimulates the economy too much. But anyway, with interest rates going up right now, this chart is missing this interest rate. We are at around 5% on the baseline, so we're up here again, back up here. And then usually what happens though, and here's one last thing that we need to see. What happens right after interest rate hikes, that there's a recession, interest rates go down. Really important. I want you guys to memorize this. Interest rates go up, recession, interest rates go down. Interest rates go up, recession, interest rates go down. Interest rates go up, recession, interest rates go down. Interest rates go up, recession, interest rates go down. It's literally, we had 1, 2, 3, 4, 5, 6, 7. 7 times out of the last 7 recessions, as we had a recession, interest rates went down. Okay, this is a graph. This is from Market Watch, but it's pretty accurate. Now, if that makes sense, let me actually get back onto the live really quick. Let's see what you guys have as far as questions, and then we'll go back to the next slide because the next one is even more important. So we're looking at here. Let's see what everybody says. Hi, everybody. Are we expecting a lot of foreclosures? Bonita Nunes says. Huge question, and I'm going to answer that one. I don't see how, Bonita, says Noel. 65% of homes in the U.S. are owned free and clear. The rest have loans under. Actually, let me share it with you guys. So this was the. Let me share the messages. Where is it here? Okay, here. Bonita says, "Are we expecting a lot of foreclosures?" And then Noel says, "I don't see how. 65% of homes in the U.S. are owned free and clear," which is true. The rest have loans under 5% interest rate, which is true. I think it was something around. I think it was under 80% were under 3% is what I heard, which not under 3%, under 4%, which is crazy, super low interest rate. Who's gonna sell that house? Nobody's gonna sell that house. Where are you gonna go? You're gonna go rent. Rent is expensive. You're gonna go buy another house at 8% interest rate. That doesn't make sense. So how is that inventory gonna come on the market? Now, if we have a recession, though, on the other end, we should have also unemployment. So if unemployment happens, then obviously you're going to get people that are going to foreclose. So you'll have an increase in foreclosures. But I believe those homes that come on the market as foreclosures are going to get eaten up by the market really fast because there's no inventory to sell. So whoever is buying a house is going to go for that. But, that's for another story. Let's get back right now to, then Bonita says, thanks, Neil, for the input. Neil says, and hedge funds are buying the rest. That's true. Jaime says, job loss, divorce, debts will put homes on the market, plus inflation. Yeah, but those homes, again, if we don't have inventory, they're going to get sold. So I'm not worried about it as much personally. But, you might be right. You might have a point there. Let's go back to the slides really quick. Let's talk about the next part here. So inflation. This is the Shiller inflation. So inflation is this is actually recessions and home prices. So what I'm showing you here is what do home prices do when there is a recession? Because we just told you, hey, we on this past chart, where is it, that we just saw right now, you see right here, interest rates might spike up here, which they did spike. If we have a recession, what happened in these last recessions that we've had over here? Yes, interest rates went down, but what happened to home prices, right? And that's what I'm trying to show you right here. So we look up at this chart, and you look at home prices during the last recessions. And you look over here in the 1980s. I don't have anything older than this. 1980s kind of corrected downwards about 10%. You can see here 120 to 110, maybe 10-15% over time with these interest rates climbing to 15%. We had a reduction of about 15% in home prices. But then as soon as interest rates went down, obviously we had that market going up. So after the recession, it kind of rebounded. Now we see here also during this recession, we had a decrease in home prices. It's been decreasing over here. And then we had home prices during the dot-com bust, which was not caused by interest rates, because we have it was just the dot-com, all the nonsense that was happening with the stocks. So real estate actually went up in price and kept going up. And then it kept going up and it kept going up because it was a bubble. We had the mortgage loan bubble, and it was just way overpriced. So if we draw a line in between here, it's pretty much a straight line to what we have right now. This would be the median, right, where you see my cursor going here. So right here we had that big correction. It was a really good time to buy it back in 2012 or so. But during a recession, obviously this one is caused by this one, but during this recession, we didn't have any home price, reduction. During this recession, what is it? 10%, maybe less. Over here, about 10-15%, with interest rates going from 3-4% to 15% for a 30-year mortgage. So yeah, it's a loss, but you only lose if you sell the house, and it's not a big deal. Now, right now we have this big increase, but are home prices going to go down if we have that recession? I don't know, because interest rates are going to go down, based on history, right? If we follow what happened in history. So home prices are going to stay elevated at the least, because even though there's going to be less people able to buy, because in a recession people lose their jobs, interest rates are going to go down. And the Federal Reserve has been talking about pausing, and we reached the level that we wanted to reach. So most likely interest rates are not going to keep going up. If anything, they'll stay stable or even come down, for that during that recession. And then you see home prices will kind of have on one end less demand, because there's going to be less people buying homes, but then on the other, because of the fact that they're losing jobs. And then on the other hand, you're going to have people that do have jobs, that do have low interest rates, are going to buy homes, even though, because they've been waiting to buy due to the high interest rates, and then they're going to go back on the market. So I believe that's going to keep going up. It's not going to be affected by the interest rates and by the recession. But let me know down in the comments what you guys think about that. Another chart I want to show you then is the historical 30-year mortgage rate versus the median sales price of homes. And you can see here, this is the median sales price of homes, You see, I mean, the other chart that we saw just two ago, it was very, very much like, how do you say, skewed. So it showed more these big increases and decreases. But realistically speaking, these weren't big increases or decreases. This one that we see here, it's pretty much the same chart. It just more spread out, and it shows you the average sales price and all that stuff. So you can see here, during these recessions, during what happens with the mortgage rates and all that stuff, you see the 18% mortgage rates. Really, home prices, because this one is skewed a little bit less, really haven't been affected much, and they kept going up and up. This was a 2006 recession, 2008 recession, then kept going up and up. Home prices recovered, and now we're up here. This is obviously the average in the United States, so it's not really exactly the same for Las Vegas, but it tells you here home prices going up versus interest rates going down, right? But here you saw the interest rates going up. It's not like prices really went down much. They corrected a little bit, but not by much, and then they kept going up. So when those people say, oh, interest rates are going to kill the real estate market, prices are going to drop, it's not necessarily true. What's going to happen, I'm going to say it later on in the video at the end, because that's going to be my final thoughts on this and what's going to happen in the economy. Also wanted to open up for you guys the chart for the amount of what's it called? The national debt. And here it is. We're at $31 trillion. And this is pretty much, it follows the home charts, the home price charts, because at the end of the day, this is what really goes on. Whenever you have a recession, you have money printed, and it's usually the case for every recession we had. This was back in 2008 recession. Look how much money we printed back then. And then right now we're at 31.5 trillion. I don't think this is actually updated. Last time I checked, it was at $33 trillion. I think in the last month we printed $500 billion just in the last month, because of the wars that are happening in Ukraine and now the new war that came out. And all this money that is being printed is going onto the national debt clock. And we're at $33 trillion right now. And it just keeps going. Just for comparison, it took us until the 1995 to get to $5 trillion. Up to 1995 to get to $5 trillion. Since 1995 to today, we've had $28 trillion printed. No, something like that. 26, something like that, because we're at 5 over here. Anyway, it shows you how much money the economy, the government is printing. And what does that mean to the economy? Because at the end of the day, what happens with home prices, and I need to explain this a little bit more into detail. What happens with home prices is that they pretty much follow inflation. It's not like your house really gains value or gains. Yes, in some cases, a neighborhood might gain value because obviously you are in a place that has maybe good school districts, or a city has a big influx of people coming in. Then your home is going to be in higher demand, which is going to mean that you will increase your home value. But it doesn't necessarily mean that you, it doesn't necessarily mean that you will be, your value of your house goes up just because you just sit in the house over time. That's not necessarily the case. Here in Las Vegas might be the case because we have so many people coming to town, yes. But for the most part, in the average in the United States, we'll have home prices go up with inflation. And here's my take. The more money they print, the more home prices will go up. Regardless of what happens with interest rates, regardless of the recessions that we're going to have, the more money they print, the more home prices are going to go up. It doesn't matter which party it is, under Trump, under Biden, I don't care about that crap. They all print money. They all print money, and they make poor people even poorer, and people that don't own assets very poor. And then they lose their jobs during recessions, and then rich people come in, or people with assets come in and buy more assets, which is what happened in 2008 with the big BlackRock and all these Vanguard, all these big funds that buy homes. The reason why they buy homes is because They can, because poor people can't afford them right now because they're in a recession. They don't have a job. They can't qualify for a loan. So what's going to happen? They're going to get more assets. Poor people are going to get less assets. Home prices are going to keep going up because the money that they print, it always ends up in assets at the end. Gold, silver, whatever. Although I don't like to invest in gold and silver. But any kind of asset that has a function or has a utility, stocks, home prices, homes itself. So home prices are going to tend to go up as long as they keep printing money. And if this thing of printing money doesn't change anytime soon and they keep doing what they're doing, don't expect home prices to crash again and be where we're at. That's for sure. Anyway, that was my 2 cents that I wanted to talk to you guys about. So long story short, if you don't have any assets and you have a job right now, you might be able to get a home right now and then refinance if there's a recession at a lower interest rate, possibly, if interest rates go down. We never know. Although in the last 7 recessions, as we saw in there, that's what happened. Or you can just rent and wait for someone else to buy the home that you were supposed to buy and rent it out to you, because we're going into a renter's nation. That's just the reality of the situation. So that's just my 2 cents. I don't care what happens with interest rates. I don't care about what happens with anything. I keep buying homes whenever I have the funds to do so, because that's going to be my retirement, first of all, and I'm in it for the long term. I don't flip and do fix and flip and stuff like that. I just do fix up and rent it out to someone, because I want to be on the other end of the thing. I'm just telling you guys what it is. I just don't want to be one of those people that is the renter. And you guys might think, oh, but you are part of the problem. No, I'm not part of the problem. The problem is that they're printing money. And that's what's bringing up asset values, and it's making it unaffordable for people that don't have assets, that are not smart, to buy assets to protect themselves against disinflation. So I'm doing that. I can see the first dislike. Thank you. Appreciate that. Let me know why you dislike this video. If you disagree with me, let me know down in the comments. And for all of those other ones, the other 7 likes, appreciate you guys. So Noel says, I don't see how many. Oh, that was the thing from before, the message from before. Let's see. Jaime said that debt pays off other homes. Debts pay off other homes. I don't know what you mean with that, Noel. Bonita Nunes, thanks, Jack. Noel says, if we had a bad recession, it might increase inventory a little bit, but hedge funds and large corporations can buy those up and shut out this new generation from being able to buy. That's my worry. And here's the thing, Noel. This is why I agree with you. I've lived in other countries outside of the United States. And the United States is the only country where homes are actually way more affordable compared to the amount of money that you make. I don't know. If you guys are from somewhere else, a lot of people from here are from elsewhere. Let me know down in the comments, how much does it cost? Based on the amount of money that you make over there, the average salary, how much money does it cost to buy a home? And you'll see how affordable homes actually are compared to other nations. Where am I trying to get to here? What I'm trying to get to is, like you said, the large corporations can buy those up and shut out this new generation. Because outside of the United States, it's not something affordable to buy a home. If you have a home that you're paid off, you are a lucky person. You're doing very well for yourself. And that's probably going to be the case in the future for the United States. And we are going towards that kind of economy, with more of an economy that is, where 99%, 95% at least of people are, below poverty level, and then probably that 5% is very rich, right? And you have to ask yourself, where do I want to be in that equation? Do I want to be on the 95% or on the 5%, right? That's what it comes down to. But yeah, that to answer that, this one that says, hey, it might increase inventory a little bit, but that's my worry as well. That's why I tell people, if you can buy a home and you can afford it, go for it. Even though there's high interest rates, do your thing, Noel also says, so true, Jack. All commodities go up. I agree with you. Property is never an exception when the money is devalued. Correct. It's not necessarily the value of the home that's going up. It's just the money that you're buying it with that is worth less. So you need more of that money to buy the same asset. So if a house used to be worth, look at back in the 2000s, if you made 100 grand, you were rich. Right now, you make 100 grand, you're middle class. You're like, yeah, you're getting by. You can probably buy a house. You can probably afford to buy a house. That's because your money is worth less. 100 grand today is worth, let's say, 60 grand back in the 2000s, right? Or even before that. When people die, Noel says the next of kin inherits the money and pays their existing loan frequently. I was responding to Hyman. Okay, yeah. The average new build in Ohio is $300,000 to $400,000. Diana says. Yeah, I mean, that's pretty affordable. Yes, but it's in Ohio. It's not a growing city. I mean, I heard actually it's growing a lot. The prices of homes and everything, but it's not Las Vegas. I don't know. I've never been to Ohio, but I heard that winters are pretty cold over there and summers are humid. But let me know down in the comments if that's the case. But I don't know. Is it worth it? 300,000, 400,000 for a new build? And depends on what the average sales price is over in Ohio, if it makes sense. I had a client, someone actually comment on, let me look at Ohio prices. He was like, oh, in Ohio I can get the same house for $220. I'm like, okay. Ohio home median price. $235,000. Yep. I mean, here in Vegas we're at around $450 or so, so twice as expensive for a house. Yeah, but then what are taxes over there? What are you have to pay taxes, state income taxes? What is cost of living? I know it's lower. Yeah. But anyway, that covers it there. Let's see if we have any other questions here to answer. No questions at the moment. I see there's 23 of you guys. Thanks for watching this market update. I just want to give you a little quick market update to see what home prices were doing here in Las Vegas. As you saw, they kind of stabilized. And then I wanted to go over some data with you guys, so cover charts and everything to show people what actually happens during recession. So when you read the big headlines out there and you're like, oh, well, prices are going to go down and blah, 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 and all this stuff, you can make your own decision based on the data that you saw on this video that, hey, prices actually go up even during a recession. They can keep going up, and, it's not that directly correlated. So that's what I wanted you guys to understand. Javi says, what builder has the best deals? Right now, Javi, I saw the Pulte has some really good deals, and let's see. Toll Brothers is not discounting their homes at all for some reason. They have some good deals on new homes, like building from scratch, but that's it. KB is not a good deal anymore. They were a really good deal back in December. Now it's not really a good deal. Let's look at some other builders. Lennar has some good deals. They have inventory to get rid of. They keep building homes, and they discount prices pretty significantly, especially if a community is already discounted. Even if it's gets discounted, we can still get you a discount on top of that. But you can get a really nice house with Lennar for a good price with good incentives as well. Who else? D.R. Horton, not really discounting. I think they're playing the game really well. Let's see, who is the other builder? Richmond American Homes. They're forced to kind of discount their house, but they're overpriced in the first place. So it depends on the community also. I think the really good deals are right now with Pulte, American West, and maybe Woodside Homes. They're a really good deal right now. If you can buy a home in the Northwest or Cadence, they have a good value to offer, I believe. But it just fluctuates. Next month it could be KB drops prices big time, and then that's a good value. But in today's market, I think those are my top favorite. If I were to answer that question, Pulte and Woodside are my favorites. Diana says my taxes are about $2,600 a year. Yeah, because I mean that's about what is it? That's more than here in Vegas. I mean, for the average house here in Vegas, unless you're buying a new home. If you buy a new home, let's say on the average sales price of a house, your taxes are going to be around $350 a month, which is about $4,000 a year. But if you buy a resale house, your taxes will be somewhere around $180 a month times 12. What is that? About $2,000 a year. So even less than yours, Diana, even though prices are way more expensive. Noel says, that was Diana. Noel says, I think 2008 traumatized people, but that was a unique situation. True, it was the loans, that messed everything up. If you look at housing values throughout a 100-year period, it's a straight up line. Yeah, that's what I was thinking. Got worse after we got off the gold standard. Yes, that's huge. The gold standard is huge because here's the thing. And I usually don't talk about this stuff on the main channel because people don't really follow this much. But what happened is 1971, Nixon took us off of the gold standard, which means the value of the dollar was connected directly to gold. And gold is a difficult asset to acquire. It requires a lot of work. So you can't just print gold. You have to work it out of the mine, whatever it is, right? That's how the dollar was valued before. It was connected to gold. But then what happened is they needed to print more money to get out of trouble. So Nixon took us off the gold standard and put us on, I think, the petroleum, standard. And then that's when they started printing a bunch of money because now they weren't connected anymore to gold, which was a limited resource. And what happened is because of that, home prices, started going up like crazy because of the fact that they disconnected us from the gold standard. And that's when, back in 1971, I'm pretty sure you just needed one person in the family to work and the other one could raise the kids. Now you need two people to work. And even then you still are poor. You still really can't make it to the end of the month and have money left over. That's why credit card companies are making so much money right now because of that. But yeah, if you look at after the gold standard, yep, that's it, Noel. Yo, Noel, we gotta become buddies. I pretty much share your thoughts 100% so far. Ali Aimer says $500,000 house with 20% down. My mortgage will be around $3,600. True, a month. That's with 20% down, and that's not like something somebody can actually afford that. Same house rent for $2,400 a month. Which is smart? Move, rent, or buy? What do you think? Great question. This is the best question so far. Now, Ali, here's the thing. If you get a mortgage today, your mortgage is going to be $3,600, but it's fixed for 30 years. And here's the thing. If interest rates go down, that mortgage rate will go down. If interest rates, the mortgage payment will go down, and maybe it'll go down to $2,400 a month. If you get, let's say, I don't know, a 3-4% interest rate instead of a 7, right? If interest rates go up, okay, you're at $3,600. You're locked in at $3,600. You don't have to worry about having a higher payment on your mortgage. Now, let's say you don't buy and you rent, right? What happened to rent prices in the last 3 years? We're up, I think, 30-40% from the stats. So if you're up 30-40% on rent prices and you have a mortgage payment of $2,400, let's say rent keeps going up 20-30% again. Now, in 3 years, you'll have times 1 point, let's say 30% they go up. Your mortgage payment will be $3,000. Let me see if I can show you here. $3,120 a month. Almost at almost at 3,600 right there. One other 500 to go. But it keeps going up over time. So you cannot lock in a rent for 30 years. Otherwise, I'll tell you, okay, it's cheaper, go for it. Lock it in. When home prices, when interest rates go down, maybe you buy a house. But you can't lock that in, and you don't know if you're even going to be able to afford it in the future. And although 3,600 seems like a lot right now, in the future, it might not seem like a lot. I mean, back in 2018, I was looking at homes. I was like, dang, my mortgage is $1,600. I'm going to go to $2,000 a month. That sounds like a lot of money. And it is a lot of money. But in reality, If I would have gotten back then, right now I wouldn't have a $2,800 mortgage on my house because I would have bought it then. That's just an example, okay? So the point is, you can't lock it in for 30 years of rent, and you're subject to inflation, and you're also not you're not paying down a mortgage. You're also not, exposed to inflation, so you don't know what's going to happen with inflation, which means that if inflation gets even higher and home prices keep going higher, you're still going to be stuck with the rent and the rental going up. Versus with a house, you're stuck for 30 years of that thing. Plus, you're creating wealth. You're buying down your mortgage and all that good stuff. And if you if you put in more money towards the payment towards the principal every month, the net interest rate that you're really paying on is going to be a lot less. You can pay off a loan in 10 to 15 years if you put down more money. So it's a case by case scenario, but it's a really good question, and I am stuck in it too. But here's the thing: there's one more risk in addition to rent, in addition to having not being exposed to inflation and all that stuff, and the risk is what happens if interest rates go down. Now you're trying to buy a home, and there's a big upside if interest rates go down and you're already locked in for a 30-year rate and you already bought a house, because now you can refinance the house at the lower interest rate. Let's say you refinance that 3%. Now your payment is $2,400 a month. Okay. Now if someone tries to go buy a house, what is the payment going to be? Maybe it'll go down. It'll be $2,900, $3,000, but you are at $2,400 a month because you bought at the right time. And if prices go up even more, even better. Let's say you put down 5% on the house right now. You're going to live in it anyway, right? If you don't own a house, get somebody to live with you and rent out part of the house. I don't know, whatever. You can get creative to get a home. But then once you're in it, you're locked in and you're in more of a safe place. If you don't own a house, if you're investing, that's different. If you don't have the extra cash, maybe it's not the right time to buy for you because interest rates are really high. Although I would argue that as well. Anyway, I hope that answered your question. But again, it's a case by case scenario. Everybody has different look on that. Bonita Nunes says, which builder has the best quality work and customer service? Every builder is different. Every community is different too. I've had beautiful experiences with most builders, not so good experiences with some builders. And then I don't want to put them out on, but I mean, who can I say? Let's see. Customer service, let's talk about quality of work first. Quality of work, I really like Woodside Homes. I like Taylor Morrison. I like Pulte. Maybe Toll Brothers and Tri-Point sometimes. Most times, yeah. Tri-Point and Toll Brothers. Customer service, for the most part, KB, Toll Brothers, Tri-Point. Pulte, maybe, yeah. Richmond. They fix the shit that they do wrong. Sometimes, just had a client had to cancel a KB because they didn't want to fix their flooring. They were like messing everything up. Hold on, let me turn on the light really quick. It looks like I'm a freaking ghost. All right, here we go. That's better. So. Like I just had a client, they had to cancel because they didn't want to fix their floating floor. The floor was like making waves and all that stuff. We brought them over to Richmond. They bought a beautiful house. They spent even more for it, just for the principal. And that didn't look good on KB at all. I'm going to call them out on their shit. So sorry if I'm cursing, guys. But yeah, it's just upsetting me. Sometimes these builders, they do some things. Now I'm improving my process every time. So as I go through all the builders and I find these issues that cause the owner to have a bad experience, I fix it, and I make it a better experience for my future clients. Because now I know, okay, hey, I just had a client that had this situation. They didn't fix that flooring. Okay, let's go in before they put up the flooring. Let's check the subfloor to make sure it's good. It's one of, and this is like one of let's say 100 steps of building a house. So customer service, yes, is good, but for most builders, but honestly, I mean, there are some builders who are just horrible. The way they're still built well because they have to be upheld to city standards, but it's something that it leaves you a bad taste in your mouth sometimes with some builders. Ali Aimer says, so it depends how long do you want to keep the house for? When do you? I hope that answered the question, by the way, Bonita. When you think is best time to buy a house? Should we wait one more year to see what happens? What will happen? Well, what are you going to see, Ali? That's a question. What are you trying to see? Are you trying to see if home prices keep going down? Are you trying to time the market? Are you trying to see if home prices keep going up? Because it's possible. Are you trying to see if home prices keep going down? If they go down, it's going to be at even higher interest rates, which means your mortgage payment is going to be even higher then. So what are you going to choose, let's say, next year? Right now you have a $3,600 a month payment, but next year, let's say it's $4,000 because interest rates are even higher. Maybe home prices will go even down lower, but with the interest rates higher, it's still going to be a higher payment every month. Are you going to be able to make a decision next year and say, okay, I'll buy at $4,000 a month because I think it's a better deal? I don't know. I mean, I bought back in May my home that I'm living in right now. I have other properties that I've rented out and all that stuff, but the house that I'm living in right now, and I was like in the same situation, interest rates were going up. I got 4.75% interest rate, and I was like, damn, 4.5% interest rate, 4.75. My payment is $2,800 a month on a $635,000 house. Now, let's say I waited a year and bought a house this year. I could have gotten that house cheaper. This house that I'm living in right now, I could have gotten it cheaper. Probably about maybe 10%, maybe not. I don't think I would have found it because no homes came on the market like the way I wanted it. But let's say I did find a house that was 10% cheaper. Well, my mortgage is going to be $3,600 a month, $4,000 a month now, because interest rates are, instead of 4.75, right now they are 7.5, 8. So would I pull the trigger now? The question is if you're ready to buy or not. If you're just like thinking about it, oh, maybe I'll buy. You don't have to buy. You're renting. You're happy. You're living the life. I don't know. Don't buy. If you're ready to buy because you see that there's potential to make money and create wealth for you and your family, whatever situation you have going on, then buy. Let's say you're single. I don't know. It depends on your situation. You're single. You should buy a home. Rent out the rooms. House hack the heck out of it. That way your mortgage can be lower by renting out the rooms. I know it might be a headache and all that stuff, but you're creating wealth for yourself. Then one day you just get the renters out. You have a family in there. But now, in the meantime, with the $3,600 a month, let's say you can rent out 2 of the rooms for $800 a month. Now your payment is $2,000 a month, plus mortgage pay down, inflation, all that good stuff that is happening to your house. So everybody has a different situation depending on what kind of stage in life you are. But if you want, let's get on a call, Ali, and I can definitely break down more that for you. And Bonilla says, yes, it did. Thanks, Jack, for the question from before. Anyway, guys, it's 6:25. I'm going to go spend some time with my family. I appreciate you guys all tuning in. I have 25 people watching. It's an honor to give you guys this information. If you guys have any other questions, you can reach out to me if you guys need to buy a home or whatever. All my information is down below in the description down there. Thanks for watching. I'll see you guys on the next update whenever I can do it. I don't know. Maybe a month from now. I don't know. There's not much to talk about. So whenever I see there's something interesting that we can talk about, I'll do that. Oh, hit the like button before you go. Bye, guys.